everybody. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Chino. Big gap down in Tesla. Actually opened on our long-term trend line, trading down just above the next projected gain level, then closing on pretty much our other projected 25% gain level. It did exceed that with the high. We have a gap left behind. Next week, I'm going to see if we can close the gap. Gap fills are like magnets. So essentially that's returning to the prior gain level just above there. I'm going to see if this will close. Again, with the rotation zone against us, with again the 8 coming in with the significant level. These are shorting opportunities if you're into shorting the stock. It's the opposite concept when we go long with rotation zones. Now we're going short with rotation zones. So the first key area we'll be watching is about even to return to these lows, 277. So 275 to 277 area, first area, then the declining 8 with this other significant level, which is coming in about this 287 to 288 level. Those are the two key areas we'll be watching to see if it can get through there or even get up to those levels. If it can't even get to a full gap fill and then rotates lower, that implies a lot of weakness in the stock. Let's take a look at the bigger picture now. Nice 3-year. I also did from the highs to this most recent major swing lows. To get our bigger projections down, we now have a cluster, interesting enough, around 226 is going to be a very key level should we break through the lows, the 244 lows. 226, then I'll be watching down to 208, and then eventually about 188. Those are the key levels we'll be watching. It still has to close. This is a 200-week moving average. Let's see how it closed. Well, it closed this week, so it closed just above it. It has not closed below it since the week of November 28th back in 2016. Didn't close below it here, didn't close below it here. So still hanging on to slight bullishness, but very, very slight bullishness. No bottoming pattern. Again, the only thing you could play is if you were really super aggressive, would not recommend it, would be for a gap fill. We're not touching that one. We're just waiting to see how this unfolds lower. Wouldn't be surprised to see a slight rally like we covered, but then it's going to be where that rally stops and how it unfolds after that. Let's just go out to a 10-year chart. Here's our 10-year chart just to keep it in major perspective. So we've had some, we're down around this key support over here. It was around this April highs in 16. And then we did get back below it in the February 20th of 17 till bouncing back up in a nice rotation trade there. Let's just take a look at the monthly chart too. Got a nice big picture, so you see all this consolidation. That's the interesting thing, is if we do get below this, especially this next trend line, really be watching. We have an end of an advanced clear path all the way. It corresponds to this cluster down here, so that's going to be our eventual target of 188 for that trend line trade that has not triggered yet. So we have for you on this quick little Tesla update. We'll talk to everyone soon. Bye for now.